Welcome to Trading Lounge and the gold and silver video for the 30th of October. So with silver here, much the same as gold, we're in a correction from the 3000 area, as you know. So I've been looking at this in terms of a wave A here, wave B here, and then down for a wave C here in terms of 1, 2, 3, 4, 5 waves for wave C here. So we can expect this to continue to move a little lower before seeing any upside finishing off here. So our main job here really is not to worry too much about this further downside here, but really to understand the turn in the trend here and pick up the thread for long trades in this sequence here. So we'll be looking for wave 5 to move to the upside above the previous high here, as wave 5 here. On the 4-hour chart, so gold can also be counted this way as well, but also can be counted a slightly different way. They both can really, but so we can count this down here as wave A, and a B and a C for wave B, then 1 and 2, nice strong third wave here. Wave 4 is an A and a B and a C, coming back up for wave 4 here. Doesn't overlap wave 1, so that's all chilled out. We have an impulse wave to the downside here. We have a corrective wave to the upside here for wave 2. We're looking for wave 3 to come down, then wave 4 and wave 5. So I can see here that we've got 1 and 2 and 3, and we'll need 4 and 5 here down for 3, then we'll need 4, and then we'll need 5 here. So I can just pull that over to the outside here. I won't go into a lot of detail here more than that for this, but as I mentioned, we're looking for this to end down in this space here. So from wave 4 to wave 5 here, we're looking for 5 waves of 1 and 2 and 3 and 4 and 5 here for this to complete here. I understand this can also be counted, all of this here can be counted as blue wave A here, wave B here, and also down for wave C here. I don't think it makes a lot of difference, but like I said, our focus and our attention will be on this trend through to here and looking for that turn, and also confirming an impulse wave to the upside so we can move in and get that set up working properly there. Let's have a look at gold next. US spot gold, this is a weekly chart here. So let's just talk about the 2000 here for a moment. We're looking for a pattern like this across here. So the arrival, the reaction, the first high above the level, and the ABC pattern. So we're still in, we've had the arrival, we're in the reaction here. So we'll be looking at the pattern like this here. So if this is the 2000 across this level here, we're looking for the first ABC, the reaction from that level in that space. Then we'll look for the push to the upside. Then we'll look for another ABC pattern that can actually pull back to the same low as this one here, but we'll look at that when we get to that point. It's a long way to go yet. This is just the normal setup that we would use on an intraday basis, on a tick chart, on a 5-minute chart, a 15-minute chart, an hourly chart, a 4-hour chart, a daily chart, a weekly chart. So, but the normal thing is to trade to this point here and then get back in over here. That's the sort of the shell of the idea. Of course, we can exit here. We could also buy back in here, which we're going to do because we're in a very large structure across the 2000 here, so we'll definitely look at opportunities to the upside through all of this. Yeah, anyway, that's the pattern that we're looking at. The only variation we can see on this is normally there's only 3 things that can happen when we get to a level in terms of patterns. Of course, there's 2 other things that can happen. We could arrive here and never come back at that point, or we may not stop here and just continue to the upside. But if we are going to stop here, well, what are the patterns that we're going to be looking at? So there's this is the most common pattern here. The variation on that pattern is this one here, where we don't come back below the level. But because of the wave count, we're looking at a wave 4 coming deeper back into the wave 4 of 1 lesser degree. And the other pattern I'll show, but it's not occurring, which is the overshoot pattern, where the market doesn't really stop here but goes up into group 1, as I call it, 1, 2 and 3, and then folds back at that point. But we're not working with this pattern because we're already correcting at this point here. So we're with the other one. So the overshoot pattern is not the one. This one here is probably unlikely because this will be a 3, 4, 5 up here. So we'll need this to pull back into this space over here, unless we get some sort of extension up as big wave 1 and back for wave 2 and then so on. It's possible, but we'll keep an eye on it. But this is the one that we're looking at here, which I call the classic trading levels pattern. And let's go back in. So the arrival, the reaction, the first high above the level, we'll take advantage of this one here, and then we'll have this wave 4 to contend with, which also could be messy, and it will be bigger. It will be much bigger than this wave 4. Because it's 2 degrees higher in structure. So there's a lot going on here before we get to 3,000, I can assure you. Yeah, so anyway, apart from my opinions, let's just try to stay with the facts. So the daily chart here. Now, as you know, originally was looking at this as a wave 4 here, but I could see after this first leg here, there was something wrong with it. So we've moved it over here. There's different ways to count this down here. I could count this down as I did with silver in terms of an A, a B, and 1, 2, 3, 4, and 5 down here. We'll look at that for wave 4. Or we could look at it like with wave A here and wave B to here. In fact, we can also look at wave B sitting here as well. But because we got silver very clearly sitting here, I think that's where it really needs to go. And it will make a difference because if I put it here, we're going to get an extra leg to the downside. If I put it here, we'll just get 5 waves down from this top here. So we'll be able to work all that out too once it's in play. But yeah, they're the different points. But I'll just stick it back over here where I originally had it. But yeah, this does make a nice, if this was wave A here, this makes a nice triangle pattern within this space here, but it can also be this way as well here. So let's just go in and check it out. So not a huge difference. You know, if we were going to go long here, and we may have gone long on top of this one here, but as soon as it drops below the level, we're out again, and then we use that high, we can drop it down to the next high. So we haven't really been long. In fact, the short trade setup's really been the one that you should be on at the moment, but I haven't put a video out for a little while because market was just traveling sideways. There was no point. We could see that it was corrective. So on the 4-hour chart, we'll just drill in here a little bit. Like I said, you know, it can be counted in different ways. So if you've got a different count or you've seen other counts, it's not really a problem. You know, it can be counted in different ways. So we can count it as an A wave here, an A and a B, and 1 and 2 and 3 and 4 and 5 for the C wave here, down for 1, back for 2, down for 3, back for 4. Yes, there is overlapping wave structures here. There's not on silver. So yeah, the other way to count this, as I mentioned, doesn't really matter. You still end up with the same result here. As an A and a B and a C wave down through here. So it doesn't really matter. The question is, though, is wave B here or is wave B here? That's the question. But what I want to point out here, if it's here, then we can look at this as 1. Well, let's just draw this out. 1 and 2 here. This is 5 waves coming down here for 3, 4, and 5 and finishing there, right? So if we use this top here as the wave 4 or wave B here, then we've got this as wave 1 and wave 2 across into this space here. And that could be the case with silver. It's quite clear on silver that that's a real possibility. So what that would do, so from here we can go up here. The other point here is that we can have a corrective move back up to the wave 4 of 1 lesser degree and then have another 5 waves down and then go up there. So that's going to be the tricky thing at this point. So we'll be able to work that out. It's not a drama. it'll just take a little bit of time. We're not going to get in on the bottom. We don't really worry about that. We want some evidence, so we want the first impulse wave to the upside, but it's not really going to help us either, because that, if it's corrective, that's going to be 5 waves, 3 waves, and 5 waves. So we'll find out when this low comes in place for this 1, 2, 3, 4, 5 here, be it the low of wave 3 or be it the low of wave 5 here, we will grab that and we will go, that's the low. We'll say, well, that's the 38.2% retracement level at that particular point in time. So if that becomes the tested support, then we can go long from that point. Also within this space here as well, we need to put it, now that we're down in here, we got 65, 1865 and 72 there. And that makes up group 2. So that's going to be the current support for the market in that space. But we expect that to be breached. We expect the 80 has become the retested resistance. The 72 is just being checked now. The 65 will be checked, and then it will drop down to the 50 at that point. So I should actually just put that. I think we'll go to an intraday chart. I'm not sure what I've done here, but we're starting to get the picture. So we can call, now that we've said all of that, we can put wave B here as an A, B, and C, or we can go, if this is the A wave down here, we could go an A wave here, an A, B, C here for the B wave, and then the C wave up here, which is a pretty ugly C wave, I have to say, going up into this space here for this as a wave C here. So yeah, I think it counts a little bit better as wave 1 here and wave 2 here. But the thing I don't like about wave 2 here, it's just so big compared to wave 1. So that puts up flags. So there's flags everywhere here. So it's a bit of a problem. But yeah. So anyway, this is kind of where we are in a space in here for a moment. So we'll look at all of this as wave 1. Let's just sharpen this up a little bit. Gee, that can actually be wave 1 here too, with 1 and 2. That still gives a bit of length there, doesn't it? And that's in 3 and that's in 5 to that point. So I'll have to go to here for that for the time being, but I should pull that apart and check it. On my next video, I'll pull all this apart much more. But wave 3 here, so that can actually come back to the wave 4 there before seeing wave 5 come down for wave 3. Put that there. I haven't put a lot of time into this, by the way, so yeah, that low there at the midpoint. So between 1800 and 1900, we've got group 1, which is 1, 2, and 3, and then we've got the midpoint, and then we've got group 2. So every 100 points, we're breaking it down into three areas: group 1, the midpoint, and group 2. And it really helps us break down the problem and helps us with solutions in terms of where to put stops and what becomes a retested resistance and so on and so on. But yeah, so that's kind of where we are at the moment with that. So this is actually giving 5 waves down from the high. That's the high. So we're looking at this as 1 and 2 here, then 1 and 2 and 3 and 4 and 5 for the 3rd wave, the 4th wave, and the 5th wave. So I guess the safe trade is if that just goes straight up from there, then we'll see a classic trading levels pattern sitting across here for sure. There'll be a struggle here because of all of this, but that's where we can go to the long side. If that occurs, that's where you can go long. So another classic trading levels pattern across here: the arrival, the reaction, the first high above the level, the ABC correction. That top is to go long on. You can bring that down to the second high here. It's like this one here. If we were going to go long, we could go long above here, then we can bring it down to that one, then we can bring it down to this one, but obviously it's faded, and we've done the same thing in reverse here if you wanted to go short. So the takeaway here is that if we get a bounce off this particular low here and the market moves back up and finds support on the 1900, well then that's the long trade, that's the safe long trade. Otherwise, we're going to see a bounce off the midpoint here back into group 2 that may or may not hold it, but if it does drop from that point, well then we've got our 5 waves in, and then we can start looking over here for an impulse wave to the upside. So we'll wait for our first decent impulse wave, and then we'll look for the correction here, and then we'll go long on that second high here. And if the timing is good, we may be able to get in lower at this point here as well. So I'm putting this video out to say this is sort of where we are. It's a little bit rough, but I'm not that concerned about it because I know that we're not finished with it, and it will be in line with, you know, the end of the elections when those numbers become so strong one way or another for each particular person, and you know, equities will be in the same situation as well with all of this. A lot of markets will be. So yeah, perhaps going long after the elections looks like the go for many things. Thanks for tuning in. Cheers.